what's up, traders? Last week we seen a little bit of volatility, basically trading down below the expected weekly range and then closing back inside the weekly expected move. So, I mean, this volatility was to be expected. Remember in last week's video, I specifically said that if we've seen massive candles, massive moves, then that might be something to talk about. But as long as we stay basically trading within the expected ranges, then there's really nothing to worry about. And in this video, we're going to talk more about that here in a little bit. But let me go ahead and give you next week's expected move. So if I pull this up over here, you can see next week's expected move is looking to be about $104, which, that's a pretty big gap compared to what we've been seeing lately. Last week we had an $80-something expected move, but the weeks coming into this week or last week, we were seeing smaller moves, right? Like back over in here, we were getting, $50 and $60 expected moves. Now, next week, we do have volatility on the table as far as high-risk news events. We have the FOMC, the Fed interest rate decision, which is expected to see no change. We have PMIs. We have a BOJ interest rate decision. It's going to affect the USD. We have initial jobless claims, ISMs, and then Friday we got non-farm payrolls. So a little bit of risk next week is being priced into the marketplace via $104. You can see here the expected range for the top edge of the expected move for next week, 5563.09. Bottom edge of the expected move, 5355.09. And that's going to be basically it for the S&P 500. Now, in last Sunday's video, I said that if you wanted to short, around next week when we trade back up into weekly supply, that level is still there at 55.72. Or next week or that week's high range expected move, you could potentially look for shorts there. And if you did do that and you were rewarded, then good for you. I'm very proud of you. That's what it takes. So next week we could see something similar. We could see more of a pullback. But if you do look at the weekly chart, notice that the drawdown from all-time high to where we closed Friday, so that's 2 weeks of price action, we're down 3.7%. All right, 3.7% from the all-time high. Not really that's scary to me. And let's go talk about that. Why? Near-term volatility is to be expected when you are investing in long-term capital gains or looking for a bullish secular trend. For instance, these small pullbacks are expected and they're going to happen. They have happened as far as time, right? You always get a little bit of pullback. Generally, those pullbacks are brought into. If we go look at the IWM, you can see that it looks good, right? I mean, last week we had a pretty volatile blow up to the upside, but most of those gains were retraced. And then even though last week was an inside range candle, it did give back a lot of those gains, closing up at 224.22. So this chart looks very constructive. And most of the people were bearish from 2023 to 2024 based on the IWM, right? Because the IWM for all of 2023 set a yearly high and then set a yearly low and basically traded inside of that range all the way up until the last quarter of the year, where it made a fresh yearly low and exploded and took out the high. All of 2023 was basically sideways, and then all of a sudden we got this huge explosive move at the last part of 2023 and it closed higher, opening 2024 much higher. Now if you look at the lows and the highs that we've made in 2024, you have been trending. Now we did get into a period of consolidation that happened around March of 2024, but we ultimately broke out in July. So just a couple months there of consolidation. But if you look at this yearly candle here, you're making higher lows and higher highs. So this is currently a trend. So, and it looks good. If you compare the IWM, which, has the smaller, more interest rate dependent small cap stocks in it, this just tells me that the market seems to be pricing in that, they are expecting an interest rate to be cut probably September. And this looks, as of right now with the data we have, I don't see any reason to think that the pullback that we've seen in the S&P 500 is nothing but a capital rotation from your more high risk growth companies, tech, big tech. Everybody thinks big tech is blowing up. This is still an uptrend. As long as you're trading above the 2024 yearly opening range on Microsoft, Apple, Amazon, Google, Nvidia, Meta, that's 25% of the market. 25% of the S&P 500 and those 6 companies. Over $11 trillion market cap or more. Also, something to remember about Apple. It wasn't the earnings, which we're going to get earnings next week on a lot. Microsoft, Apple, Amazon. We had earnings on Google last week and they weren't great. And then Meta are all getting earnings next week. A lot of volatility can definitely come from that fact also. But going back to Apple for a moment, Apple put aside $150 billion for stock buybacks. Ultimately, we got that news right in here. And look what happened to the stock after that news came out. Stock buybacks, beautiful, right? Huge move back to the upside. So I'm assuming that a pullback is people are taking profits out of tech and then they're just rotating that capital in the small caps. Be very careful out there. Make sure you guys are staying tuned to each weekly update that I provide. But as of right now, I don't see any reason to be extremely bearish on this marketplace at all, really. But time will determine whether or not I change that bias. As of right now, I have a bullish bias. Had a bullish bias. The trade on Bitcoin that we were looking for absolutely panned out to perfection. It took out this low as we were expecting and then immediately traded back up into the range as expected and boom, exploded back to the top edge of the move. As of right now on this chart, I have most of your relevant near-term levels. We have weekly res setting right there at 69,637. Monthly res setting at 67,472, which is this white line here. This weekly res also coincides with the 786 retracement level from Bitcoin's all-time high down to the low of July that was set. A lot of bears think that this is going to be the rollover period or rollover point on Bitcoin right here. Also, I have drawn in here 2 different descending trend lines. The first original descending trend line was taken from the all-time high and then this high that was put in April 2024. Notice how we traded into that trend line here. It acted as resistance and then we did it again here, making a new swing high, taking this high out and then rolling over, liquidating all of those key liquidation points that we discussed in last week's video. So everything is working out beautifully for Bitcoin. As I stated last week, I think, path of least resistance for Bitcoin is higher, being that that's where the majority of liquidity now resides. And that does look like what Bitcoin is trying to do. So yeah, we do have some near-term resistance right here, but from weekly res, you got one more monthly res up there, and then literally that's it, the all-time high. So if we were to break out above the higher ascending trend line, you're only going to be at this level around 78, I can't remember, $70,800 ish, puts you just a little bit less than 5% to the all-time high. And just as well as I do that Bitcoin can make a 5% day, right? This right here, I'm almost sure was a 5% day. Pretty close to it if it wasn't. So you get what I'm saying, right? It wouldn't take very long for Bitcoin to make fresh all-time highs. And you do have those people out there that are saying the top is in for Bitcoin. It's just beautiful. I love seeing that. But with the data that I have now, I still am bullish on Bitcoin. I love Bitcoin as far as longer term. I've always said this. I don't see it ever being used as like the world currency. I think Bitcoin is too slow for that, but I do believe that Bitcoin can be used for large transactions. As I've stated, Bitcoin is perfect for that, especially if you're an oil seller in the United States of America. Say you have a company in the US and you sell oil. You're going to buy oil from, Africa. And then you're going to turn around and sell that oil that you're buying in Africa to China. That's 2 different currencies you need right there just to make one transaction. Whereas you could sure it all up with just one currency being Bitcoin. Now, obviously, we're not there yet with Bitcoin, but I can see that being Bitcoin's future. Obviously, with the ETFs that have been approved, You know, people think this time is going to be different. We're not going to fall in line with the original 4-year market cycle theory that, you know, people have been talking about now for years and years. And that's a possibility. But as of right now, what we've seen in the past on Bitcoin has been every time we've had a halving, Bitcoin has had a bull market. And I don't see any reason why this time might be different. But if things start to change, obviously, if the Fed has to cut very quickly because we're starting to see jobs decrease substantially, unemployment starts to just grow massively, we start to see that a recession is no doubt going to happen for sure, then obviously my bias would change. But as of right now, guys, I don't see any reason to be bearish, you know, except for the near term. Like I said, one could have shorted S&P 500 last week. You could have made a little bit of near-term money. But long term, I'm still bullish. I think tech stocks will be bought right back into. I think ultimately, you know, this is just going to be a pullback. Volatility did get up as high as 17 in the VIX. But ultimately, all we need is for buyers to step back in. We know that Apple has a ton of money to invest into the marketplace. We know that Warren Buffett has like $150 billion to invest. Here, I can show you. Give me 1 second. Instead of me just telling you, let me show you some cash on hand right here. Let's grow this. We got $189 billion Warren Buffett has on hand to invest. Where's Apple? $67.2 billion. Now, I don't know if this money was the same money they had set aside to buy to do the stock buybacks. If it is, then obviously they're buying back their stock. 150 billion shrunk down to 67 billion. So they could literally be buying into their shares as we speak. And I see that as being bullish. I see that as being bullish. So I don't, like I said, we'll continue to put out these weekly updates. If anything changes dramatically throughout the week, that's important, and obviously I will do, you know, more often updates than just weekly. But right now, the weekly updates seem to be just doing just fine. So we'll continue to do this, and if anything happens, I'll let you guys know. But as of right now, please make sure you are only risking an amount of money that you can afford to lose, and we'll talk to you guys next week. Thank you all so much for your time, and thank you so much for the well wishes I've gotten from everybody. I really love you. Appreciate you so much for that, and thank you for your patience with me. Once again, thank you. You guys are fantastic. Make sure you, my few ledges, trade safe, trade smart, and as always, happy trading, everybody.